Good afternoon, everybody, or maybe even good early evening or good late evening, depending where you're joining me from. This is Ron Wheeler, and I will be the host of today's session, How to Generate 3% per month with one option trade per week. And I always like to open up the webinars just a little bit early to make sure that there's no bugs or any issues technology wise. So do me a quick favor. I'm going to advance the slides here. You should see a slide that says on air. If you can see the little red on air light, and if you can hear me, do me a favor, just give me a quick shout out in the chat window, which, by the way, is at the bottom of your GoToMeeting little, what do you call it? The little control panel there. Just open up the chat and you type to me. You can't see other people chatting, by the way. You can just see yourself. And then if we answer you in the chat by typing something back to you, you'll be able to see that. So let me know if you guys can see me. And all right, cool beans. I already see some yeses in there. Susan, you were first, which is good. And then I see lots more yeses after you. But I also see, let's see, Amy, Bill, Deborah, Don, Floor, Frank. Looks like Gail, Gary, Jeffrey, John. A lot of Johns in here tonight. John, Jim, Mario. Just kind of reading some of the names off here. Richard, Terry, Wilson, Tim, Terry. I see some of you. I know some of you guys. I see some common names here. Sierra. Do me a favor. While you guys are in that chat window, let me know what time it is by you. I just want to assure you this is a live presentation. We start officially at 5 p.m. Eastern Time. And Eastern Time, speaking of, I'm in Ohio. So that's why I go by Eastern Time. If you didn't know, VectorVest has an office both in Ohio and in North Carolina. I happen to work in our Ohio office. And my colleagues that you'll hear from tonight, they're all down in North Carolina, which is kind of nice. Only because it's starting to get cold here in Ohio. So they're going to get the benefit of some nicer weather, unless I come to North Carolina at some point over the next 5 months. Every time I come to North Carolina in the winter, it snows, or there's an ice storm, something crazy. So I'll try not to bring any of those. Tim, 5 p.m. Go Bills. Yeah, we here in the Cleveland area, we're pretty jealous of those Bills. We're pretty much jealous of any team that has over 3 wins. But Rich 458. So yeah, a lot of you guys are in the East with me as well. 358. Olivia, you're in Minnesota. 458, 5 p.m. I lived in Zanesville, Richard. That's south of me. I'm in the Akron area. Ontario, cool. That's also Eastern time. Got 4 p.m. Sierra, so you're kind of in the Central time. Wait a minute, no, 4 p.m. Yes, that's in the Central time. And then Alabama. Okay, cool. And then just for the heck of it, what do you guys do? Are you retired? You still working? I always just like to get kind of an idea of who the demographic or what the demographic is. I will tell you this, that when I first came up with the concepts of what I'm going to show you guys this evening, is I was tasked to create a course for our retirement section. So aiming for people that are retired, but it's been kind of so popular. I mean, I'm not retired. I'm 49. I do this. This is the bread and butter of what I do as a trader and investor. What I'm going to show you tonight. I've had people take this course that are as low as 14 years old. A guy bought it for his son, and he wanted to show him how he could make money using the market. So it's kind of cool. The kind of interesting demographic I see. All right, semi-retired Richard. Oh man, you got a lot of letters back behind there. Ooh, CFP. That's a rough one. Congratulations on that one. Teacher, awesome. Sierra, Tim, semi-retired, retired, working as a real estate broker, still working. Richard, uh, Dave. I almost did a CFP until I realized how how difficult it actually was. So, and especially if you don't like you have a background in accounting, that definitely helps. And my formal education was not in that. My formal education's in IT. So other than, commodity trading and CTAs and stuff like that, I really have no background in that heavier stuff. So I decided to not go ahead and do that. I didn't think it was going to be all that important anyway. But hey, that's a serious deal. So congratulations on that. All right. Well, guess what? It is 5 o'clock. So let's go ahead and let's officially get started with our presentation. It is titled How to Generate 3% per month with one option trade per week. And I'm really excited that you're here because this webinar really is going to teach my bread and butter system, a system that I use every week with live coaching students. And I've been doing this now for, I think, like 8 years here at VectorVest. So I'm going to show you how you can turn as little as 15 minutes a day. You can dedicate more time if you want into a consistent monthly paycheck. And it doesn't matter what the market does. Bullish, bearish, makes no difference. So stay with me because you're going to learn today what could transform your financial future, just like it has for me and thousands of students I've had over the last decade. Now, just a reminder, the session is live. It's just past 5 o'clock here in Ohio Eastern Time. You guys have been typing away in that chat. I appreciate that. So interact with me in the chat from time to time when we have questions. And if you have questions, I've got a team with me that they're going to be happy to answer questions for you. And then we'll have a little Q&A at the end that'll help as well. All right, so in the webinar, you're going to begin seeing how you can make a paycheck averaging about 3% per month or more, keeping in mind that you can do this regardless of market direction. You can do it with little to no prior experience with options. It's safer than buying or even selling stocks, and it's something that you can implement quickly. Now, if I were in your shoes, you might be thinking, is it legit, right? I would too if I were you. I see those annoying, overhyped advertisements of the guys standing next to their fancy cars or flying in their private jets. I'm not like that. I like to let the results stand for themselves and let you decide. Now, this is a look at how we're doing so far in 2025. I have a $100,000 trading account. And so far, and actually October is not in here right now, so I'd have to get the more up-to-date numbers. But I think so far for this year, we're up right now with October almost being done. We're up about 28% for the year. This shows 20,800 at the end of September, but we had a pretty good October, and we're up about 27 or 28% right now, with a win rate at about 59% now. Now, even before October came in, September was still 21% with a 57% win rate. And again, this is real money trading with my clients. So I, on average, can do about 3% per month. And, you know, I might be a little bit behind this year, but I'm definitely still in the range of getting into that 35, 36% range. So these are real trades. And I'll show you some of my other results a little bit later with my spreadsheets that I keep towards the end. Now, one of my recent students sent me an email and said, hey, I want to thank you for send a quick email and thank you for your team for the SPX Paycheck course. The SPX Paychecks is the most basic trade that we teach. Anybody can do this. He took our course in September, been using the system, and he wanted to share his results. He entered his first 35 Delta trade on September 21st with only $5,000 in the margin account. Now, less than 3 months later, he's already up 24.9%. Thanks again. I'll be teaching this method to my retired in-laws to help them grow their income in retirement. Now, I love hearing that. It's also a lesson for you. I know I showed you my results based on 100 grand, right? You don't have to have 100 grand. Carrie started with 5, right? You can start small while you learn and practice. It does build up quickly. For example, if you started with $5,000 and you average 3% per month, compounded over 15 years, that puts you over $1 million. Now, if you start with 25,000, you'd be near $1 million after 10 years. You're looking at some serious money. Now, clearly, if you have more than $5,000 or $25,000, you're going to get there a lot faster. Now, some of my clients were kind enough to share their photo and their results with you, and we're going to talk about a few of them today. Listen, these are real people just like you. So as I teach you the system, share their stories, I want you to pay attention because you might find that you're in a similar position now as they were when they started. Now, I mentioned earlier that my name is Ron Wheeler. I'm the option income coach here at VectorVest. I've been trading now for 28 years. Now, when I first started trading, like a lot of new traders and investors, I had a rough time, and I actually lost a couple of my first accounts. And the ultimate reason of why I lost was because as a trader, you have to balance two things. You have to balance, are you right or wrong? So if you buy something, it has to go up. If you're wrong, you don't make money. Then you got to kind of balance the risk, right? It doesn't help if you're 80% right, but one losing trade is wiping out all your gains. Now, I was lucky. I worked for a company that created financial software. So I was able to learn from some of the best traders in the country. And after about a year and a half of being stubborn, I finally asked for their help. They gave me help, and I became successful slowly but surely. Now, at the time, I traded commodities. I didn't trade options. I didn't trade stocks. I traded nothing but commodities. And I day traded. I position traded. I swing traded. I did all commodity trading. Never really was an option fan. I dabbled with options a little bit, but I found that by trading options, I didn't really make more money than I could by trading commodities. Not that options are bad, it's just that I didn't know how to do it right. Well, something in my history changed that. Into my trading career, probably about 6 or 7 years into my trading career, one of our clients visited our office, and he was from the Midwest, and he actually was a commercial hedge fund trader. but his specialty was options. So he traded a lot of options, did a lot of option hedging for this hedge fund, and he showed me and kind of introduced me to, I guess you would say, the more institutional methods of trading options, something that you could still do even as an individual trader. He showed me how he could set up these options trades where I would set up a trade on something like corn. He could set up an options trade where if I was bullish on corn, I bought corn futures, it would go up, I would make money. But if it didn't, if it went sideways or down, I lost. He showed me how to construct an options trade where I could make money even if it went down or sideways in addition to up. It really kind of lit up my interest in options. Now, I didn't just become an immediate options trader. I still was trading commodities very successfully, but I started dabbling more and more in options. And after, about 10, 12 years into my trading career, I decided that I wanted to stop sitting in front of my screen for 8 hours a day trading and kind of do a more passive approach to it. So I started dabbling more and more in options. And eventually, about 15 years ago, I really made the big jump. And I started doing options more and more till about 10 years ago, where I'm basically just trading all options. So, what I'm going to show you tonight is kind of that journey, if you will, that he took me on, showing me, how I could trade options, increasing my probability, locking in and controlling my risk. I'm going to show you how we do that. Now, I'm also going to show you the system I use to generate that average of 3% per month I tell you. I'm going to show you case studies, examples of our clients who are doing it, and then I'm going to show you the system so that if you learn and follow along, you're going to be able to do the exact same. And do me a favor, stay with me to the end. There's a lot of information in today's webinar, so it's going to benefit you to stay to the end. And if you do, I got a little checklist we'll put out to plan your trade. It's a little PDF. We'll put it right in the handout section. Just remind me when we get there, because after about an hour of talking, I typically forget about doing that. And also, if you have questions, please ask. This is a live event. I've got my team with me today. They're going to answer questions in the background. My colleague Steve's going to probably hop in here at the end. He's going to help me do a Q&A with you guys. And listen, there's only so much I can cover in an hour. So at the end, I'm also going to tell you how you can get my help directly to establish this the quickest way you can in your portfolio. Okay? Now, let's jump in. Why is this such an important topic? It's important because without an income system, financial stress is your constant companion. It's going to create a number of problems for you. You may feel stuck working longer than you planned, or maybe you're stressed worrying about running out of money. You might be depleting your savings faster than you can fill it, especially with how prices have risen so much in the last 5 years. If things don't improve, you may fear you'll continue to have losses that draw down your account. You're going to get behind on your goals, maybe even question your ability as an investor. If you're retired, you may even have the fear that you're going to have to go back to work to create an income stream. Worst case scenario, you're going to run out of money during retirement. Now, with the options paycheck system to help you generate income, you can really break free of that chain. It's designed to help you generate income safely and consistently in less than 15 minutes a day. And I think this is probably one of the most important points of the webinar. So pay attention, write it down. If you desire to be financially free, you need income. To be financially free, you need to learn to generate enough income from your investments that cover your expenses and lifestyle needs. So I'll say that again. If you want to be free, financially free, you have to learn to generate enough income from your investments to cover your expenses and lifestyle needs. So whether you're still working or maybe you're already retired like a couple of you are, the ability to generate income from your investments, it's one of the most empowering skill sets you can have. Because when you have that ability to generate income from your investments, your life will change. If you're still working like I am, you can increase your earning capacity. It's like having a second job. If you're retired, you can have a consistent source of income as if you quit your job, but they kept paying you. It's like a tap you can turn on whenever you want. That's going to allow you to do the things you want to do now and if and when you retire. Having an income system will allow you to retire younger. So I'll say it again. And again, this is one of the most important points of the presentation. If you want to become financially free, you need to generate enough income from your investments that exceed your living expenses. And like I said earlier, you'd be amazed on how low of an account you need to start with this. Brian of ours is a great example of this. He had some health problems and he said he wanted a way to supplement his income. So he opened up an account with $6,000. He said by using the options paycheck system, he was able to generate $23,000 in profit in 10 months. He said he had 100% winning trades, 31 of 31 winning trades. Now, the key point here is this: it's not beginner's luck. It was the result of following the system. It's the system that helped him get that 31 of 31 winning trades and create that $23,000 in profits in 10 months. Now, to get to that, the first thing you got to know, it's a bit of a strategic mindset shift. You're either going to continue being the gambler where you lose more than you win, or you're going to become an option seller and win more than you lose. Being an option seller is the way to making consistent income. And most importantly, it allows you to win even when you're wrong. Now, the reason why I kind of put this into this, right? The gambler or the casino, the gambler being the buyer, the casino being the seller. Think of how the casino makes money. Why do they make money? Well, we always know the house always wins in the end, right? But they win because they control and stack probability in their favor. You ever see a roulette wheel with 3 greens on it? You see the lower payoffs on blackjack? They're controlling and stacking probability in their favor. So even when they lose, they're losing less, but they're going to win more. The paycheck system is around that same concept. You're going to be stacking the odds massively in your favor and controlling risk. So even when you do lose, the winning is going to pay for it. So make a note of this. If you want to control your returns and results, you need to know how to stack probability in your favor. And the obvious question is, how do you do it? Well, that first shift is to go from being the buyer of options to being the seller. And this is what my mentor taught me way back when he visited our office. He had to kind of reverse the idea of the trading on me. Now, Bruce is another one of my clients. He said he's also a great example of that shift from gambling on stocks to being the casino, controlling and stacking probability. He said prior to working with us, he had mainly taken stock tips from his broker. He focused first on our SPX paycheck system. This is our most basic trading system. He said he's not the most technical person in the world. But in the time he's been working with us, he's grown his trading account from 100 to 497,000 in 3.5 years. He's achieving a 74% win percentage simply by following the rules of his options paycheck system. And the whole system takes him around 15 minutes a day. So let me show you how this works. Here's an example of a typical trade you've been taught to make. You find a stock you like, you think it'll go up, so either you buy shares of it or you buy a call. Now, why do you buy a call option? Well, mainly when you started learning options, it's what you were taught to do, right? But what ends up happening a lot of times? Either the stock doesn't go up or it doesn't go up enough, and that call that you bought ends up expiring worthless. Has it ever happened to you? Yes? Well, what's the problem that's causing you to lose? Most people feel the problem is they picked maybe the wrong stock, or maybe it was the wrong option strike or the wrong expiration. But let's talk about the real problem. If you've been losing money or had more losers than winners with other systems, it's not your fault. It's because most of the systems on the planet teach you to be on the wrong side of the trade. You're taught to buy an option. But as a buyer, the probabilities are not on your side. And for most people, they end up buying and losing and buying and losing and buying and losing. Our options paycheck system teaches you a new way of thinking. You need to be the seller and not the buyer. This is how you get ahead of everyone else. This is how we're going to put probability on our side, and it's how we can win even if you're wrong. So let's take a closer look at how this works. Wow, I zoomed in on my screen. That's interesting. I said a closer look and I hit a button and zoomed in. That's funny. That was unintentional. Live webinars, right? Anyway, as a buyer, a typical trade gives you a 50-50 chance to be a winner. Because when you buy, remember, the only way you make money is if the stock moves in your direction. But instead of having that buyer's mentality, we're going to have a seller's mentality. So instead of just hoping the stock goes up, as a seller, you're going to strategically set up your trade using probability. Because probability will tell you where the stock is not likely to go. So instead of just needing the stock to go in your direction, you can ultimately pick a price underneath the current stock's price, okay, and give yourself a better chance to win. Now think about that, right? What you've done is you've gone from a 50-50 proposition to now, as long as the stock stays above that price, you make money. If the stock goes up, you make money. If the stock goes sideways, you can make money. The stock can even come down a little bit and you still make money. So right from the beginning, probability is in your favor. And in some trades, we can even increase that to as much as like 70, 75%. We can simply choose lower prices. Now you can make money if the stock goes up, sideways, or it even comes down a little bit more. Okay? You can only do this as an option seller. Now, as a seller, you're putting the probability of success in your favor. Okay? That's the definition of an income trade. An income trade is one where you can make money even if you are wrong. Now, Bruce, he continues to trade with us every week. In fact, I talked to him this morning. He was in our coaching group. Another day trading on the beach, got my eyes on AMC and a cold beer. Life's good. Thank you, VectorVest and Ron, for giving us the tools to do what we do from anywhere. That's a great picture of financial freedom. Now, another client of ours was Mike, and he dabbled with options, but said as he traded it, he lost in every one of his trades. Have you ever been there? Can you imagine how frustrating it's got to be to lose on every one of your trades? Well, he stopped eventually. He went back to the books to try to learn more about options, but he said he never felt comfortable he knew what he was doing. He said he didn't have any set criteria. He had all this options knowledge, but no way to like put it into use. So we worked together. I taught him the options paging system, and he said he became an income machine right off the bat. After he learned the system, he went and said he had 17 out of 19 winning trades, the profit of over $12,000 in 4 months. Now, the key here is this. Going from buyer or gambler to seller or the house is what turned his situation around. He even shared with me his results. Take a look. He got in his profits, look at the profits column, way more profits than losses. That's, of course, big. Look at the work days to close. 7 days, 5 days. These aren't day trades. These are trades you're going to be in typically from about 7 to 10 days. And he's pulling in about $1,000 every 7 to 10 days here. Now, if you're like Mike and like Bruce and even like Brian earlier, they start off with our most basic trade. It's based on the S&P 500. You can do this one trade per week. That's it. It's averaged about 2.3% per month alone after the last 8 years. You're not just learning how to trade options. You're creating a future where your income grows without adding hours to your day. Imagine turning your financial stress into confidence. Your money's working harder than ever, even when you're not. And the key here is this. Now, I'm going to say a lot of keys tonight. You're not looking for one big home run trade to become a millionaire overnight. You're growing your account steadily each year. And that's the takeaway. Home runs look good, but singles are what win the games. This is what makes you a good income trader. These singles are low risk, right? They're going to enable you to never run out of money and to be able to do all the things that you want to do. So now, you've seen by flipping the switch kind of from buyer to seller, you can start stacking the odds in your favor. You can make money no matter what the market direction does. Now we're going to stack odds even further by understanding and capitalizing on the 3 most common buyer's mistakes. Mistake number 1 that option buyers do is they choose option strikes that are unrealistic. Essentially, so far away the stock has no chance of hitting it. Let me explain. This is a stock. Let's say you're bullish on the stock. The stock's $217 a share. You go out there, you want to buy an option, right? If you think a stock's going to go up, you typically buy a call because a call gives you the right to buy the stock at a future date at a certain price. Well, typically what you would do is you go buy a call that's at the money, meaning it's near the stock price. But unfortunately, what a lot of option buyers do is they go way up here and they buy their options. Stocks trading at like 217, they go up to $230 and they buy their call. Why do they do it? They do it because that option's very inexpensive, right? It might cost you $2,000 to buy an option right where the market's at. But these options up here only cost you $50, $100, right? They're cheap. But the problem is they're using the option market like a lottery. And we call these trades lottery ticket trades because you're not really going to make money unless the stock goes up $17 or $18 a share. Most of the time, these lottery option buyers, they lose their money. And since there's always going to be these people out there buying those options, They need a seller. They need a casino. They need a house. They need the bookie, right? That's what we're going to do. We're going to sell them those options that have a low probability of working. When we do, that gives us a high probability of winning. Now, the same goes for puts. There's people who may buy puts way down below the market because they think a stock is going to go down, but they don't want to spend the money to buy the right options. They buy these cheap, way lower options than the market has. It might cost you 50 bucks, right? 100 bucks. Guess what? Since those option buyers are out there, they need the house. We're going to be the one who sells it to them. Because when we sell those options, it gives us a 60 to 90% probability of success. Okay? And listen, it doesn't matter why people are buying or selling or buying those options. The bottom line is they're doing it. Take advantage of it, sell it to them, make the trade. Now, the second mistake that a lot of buyers make is they buy options that are way too close to expiration. Okay? Too close to the current date. It's like when you go to the grocery store, see a piece of steak that's discounted. It's discounted because it expires in the next day or two, right? That's why you're getting a bargain. If you don't go home and cook it, well, then you wasted your money. This is what option time decay looks like. So I want to show you kind of a graph here. Out on the left, where you see it on the upper left-hand side, this is 6 months to expiration, and this is a time value. So let's say the option's worth about 70 cents in time value. You're going to see as that expiration gets closer, the time value is slowly and slowly and slowly losing its value to about right here where we lost about 50% of the value. It took 135 days to go from here to here. We lost 50% of the value. But look at what happens in the last 45 days. It quickly loses the remaining 50%. The decay of an option becomes exponential in the last 45 days of its life. The price really drops off. Now, a lot of buyers, they buy their options down there because they're cheaper, right? They don't have any premium left. But again, it's like buying a lottery ticket. By buying options in the final 45 days, you're stacking probability against you because even if the stock goes up, the decay of the option is going to eat into any potential profits. So what we're going to do, again, we're capitalizing on a mistake that buyers make. We're going to sell our options in that window. And to be more specific, to give you kind of the sweet spot for this, I'm going to be selling options that range between 21 and 45 days. That's the sweet spot of selling options. It still has enough premium to make it worth my while, but the time decay is in place to make that work for me. Now, take a look at Home Depot. Let's say you think the stock is going to go up. You go out there a month and a half away, you buy a call. But remember, even if the stock goes up, that decay is in its exponential place. So even if the stock goes up, that option is going to be draining all of its value. Now remember, you're a buyer in this scenario. You buy an option, let's say you buy it for $1,000. But if it's losing $50 a day in decay, guess what? When you go to turn around and get rid of that option, it's going to be worth very little, even if the stock goes up, because the premium is decaying faster and faster and faster. Now remember, you're not going to be the buyer now. You're the seller. You're selling this option to somebody. When you sell it, let's say you sell it to someone for $1,000. Your job as an option seller is to exit or cover that trade later on before expiration at a lower price. So as that decay comes in, let's say you sell it here, $1,000. Down here, that option may only be worth $500. You exit it and you profit from that transaction. Okay? Remember, there's always people out here doing this poorly. Take advantage of their mistakes, be the seller, let the trade work for you. Now, the third mistake that a lot of option buyers make is they buy what's called an overpriced option. And a lot of people don't know this one, so this is an important one. I want to show you what I'm talking about here. Here you have a stock, two stocks in fact, and they're pretty much the same price. They're both like 12 cents apart, 76.24, 76.36. But even though the stocks are the same price, look at how different their option premiums are. And if you're newer to options and you know how premium works, when you buy one option contract, it controls 100 shares of stock. So when I look at that premium over on the left and it's $9.10, that means $9.10 a share. If I buy that options contract, the July $75 call, it's going to cost me $9.10 times 100. So to buy that call, it's going to cost me $910. Over on the right, it's going to cost me $1.80 times 100 or 180 bucks. Now, I'm not trying to play tricks on you. It's still a July option, still a $75 call. So same strike, same month, same everything, same price in the stock. Why is the one on the right like 4 times less expensive? Because the option on the left has, oops, went the wrong way there. The option on the left has extremely high volatility. When volatility gets high like it does here, that means the premium for the option gets really expensive. That's why you see here, look at this. High volatility, $900. Low volatility, $180. This option is 4+ times more expensive. Now, who cares, right? It's only money. You can afford it. What's the big deal? Here's what the big deal is. Let's pretend that both stocks go up $8 a share from 76 to 84, right? If you bought 100 shares of each of these stocks, you just made $800 a piece. But you're an option buyer, so you bought the options instead, right? Options are great. Limited risk, much more, lower margin requirements. They've got better returns. What happened? That option on the left actually lost money. You had a stock that went up $8 and it still didn't go up enough for you to make money. That's why I said earlier, the stock doesn't go up enough. Perfect example of it. You still didn't make any money. Whereas over on the right, you've got, again, like a 400% return on that option, right? You bought an option for $1.80 and now it's up 720 bucks. That buyer on the left didn't pay attention to volatility and they paid way too much. And that made the trade very, very difficult to make money on. So the whole theme of what we're doing here is we're looking at mistakes that buyers make. What we're going to do is we're going to find these expensive options and we are going to sell them to people. Okay? Being the option seller in this case, when we have the premium this high, we're going to make more money. And better yet, we're going to reduce our risk on the trade even more. How do we reduce our risk? We're going to add more probability to the trade. I'll talk about that a little bit later. And we're going to have less monetary risk because the premiums are higher. Okay? By doing this, you're stacking probability even more on your side. Now, one of the most interesting stories from a client I've had is Bob. He said prior to working with us, he was making a bunch of the mistakes we just talked about, and it cost him dearly. In fact, he ended up either broke or bankrupt 3 times. In his own words, said he came close to living under a bridge. The options paycheck system helped him turn his situation around in about 4 months. He learned to turn those liabilities into strategies that controlled and stacked probability. He said in 4 months, he grew his account by 71% and had a 79% winning trade percentage. Remember, if you want to control your returns and results, you have to learn how to control and stack probability in your favor. Now, in the chat, do me a favor. Let me know. Have any of you ever made any of those option buyer mistakes? Just type a yes or no in the chat. Just curious. Of course, Terry, you said yes. Tim, Bill, just read a couple of them off here. Susan, Michael, Greg. Yeah, listen, we've all made those mistakes. That's why I didn't like to trade options in the first place, because I made those mistakes too. It's not our fault. We were just taught a broken system. Now, at this point, you hopefully know that, or you're intrigued by being an option seller. You know that you're going to avoid and capitalize on those common mistakes that buyers make. But now let's look at how to trade with very little risk. Because when a lot of people hear the word options, especially the term selling options, they immediately think it's risky. But the options paycheck system uses a low risk strategy for selling options. And this is why it's a core strategy we teach our retirees. Now, why is reducing risk so important? Well, what good is being 60, 70, or 80% right if one bad trade wipes out all of your winners, right? And most people who aren't selling options correctly, they're not using that options paycheck system, they're not preserving that capital. They're seeing that one bad trade wipe out the gains from a bunch of winners. That makes it really, really hard to cover your losses. It takes a long time. It's very difficult to recover from that. But when you do this right and you have the right system in place, You're going to have a built-in protection plan. You're going to take care of risk management before you even open the trade. I always say, how do you avoid a trade that's going to wipe out 9 of your gains? Don't take it. That's the easiest way to preserve your capital, right? We're going to take care of risk management before we open the trade. That's going to allow us to preserve and grow our capital. When you can select the best stocks for this, set your option trades up in ways that reduce risk, you're going to preserve and grow your capital. Like I said, those home runs look good, right? I bought a $100 option, made 850%. But the singles are what win the games and create income. Now, one of the most common questions I get asked is, can I trade options from an IRA? Well, a client of ours, John, grew his IRA over 112% in 1 year using our options paycheck system. He said that he tried and struggled with trading for some time before working with us. He learned to follow the system. He turned his inconsistent results into predictable monthly income. He said in 12 months, he enjoyed 85% winning trades and more than doubled the size of his IRA while spending no more than 15 minutes per day on his trading. So, as I said before, right, the options paycheck system makes sure you reduce your risk before you even open the trade. First, we're going to choose low risk stocks. We have a very specific criteria, but in general, if we're bullish, we focus on good stocks that are rising in price, very similar to what you would see here. And then instead of selling an option naked, we're going to sell an option with protection. So let me show you how to do this. Traditional option selling systems leave you with all of this risk down here. Remember, when you sell an option, right, you're not just selling an option like you sell something on Facebook Marketplace. Selling an option is, I guess I would say, more akin to like when you buy insurance for your car, right? You have car insurance in case you get into an accident. So you buy an insurance policy. Well, the seller of that insurance policy, guess what? Is the insurance agency, right? You're going to pay them a premium. They, as the seller of the policy, are going to collect the premium. When you buy an option, you pay a premium. When you sell an option, you're the one that collects the premium. Now, if over the course of the 3 months that you bought your car insurance policy, if you have no accidents or claims, the insurance company, the seller, gets to keep your premium. Now, if you have an accident, they're going to have to pay out. Well, being an option seller is very similar, right? When you sell an option, you may have a stock obligation. So if you sell an option and the market turns way against you, that's going to be a really bad thing. That's going to be like a claim on your insurance, right? So we don't want to have all this risk. What we're going to do is we're going to bring that risk to here. So let me show you how this works, okay? Again, this is the kind of graph I'd like to be bullish on. It's a beautiful graph. It's understandable. Now, traditionally, you're going to go out, buy the stock for the current price. Or maybe you're an option buyer, even though you shouldn't do that. You're going to use the current stock price as a basis for where you buy your call. So maybe like a 135 call here. But you're not going to do it anymore. Remember, we're flipping that switch. We're the seller. So if we think that a stock is going to go up, we go underneath the stock price. Remember, we want to create an area where if the stock goes up, we make money. Sideways, we make money. Even if it comes down a little bit, we make money. So we're going to go underneath the stock, and we are going to sell a put. Now, when you sell the put, you're getting paid. In this example, let's say you get paid $200 for every contract you sell. If you traded 10 contracts, you get paid $2,000. Now, that's great. But remember, at some point, you have to close this trade. The option contracts trade every day like the stock does. They go up in value, down in value. They move in price. We're going to enter an option contract by selling, and at some point, we're going to cover that position by exiting it. All right? Now, the problem is, if the stock goes way down, you're going to have to cover that sell at a very expensive price. We don't want to have that happen. So what we're going to do is we're going to use a little bit of the premium that we collected. We're going to go a little bit lower, and we are going to buy a put as insurance. Now, let me explain what this does. Don't get intimidated by this. You don't need to know all this stuff right off the bat. When you sell a put, you take on the obligation of possibly buying the stock. Now, in 15 years of being an option seller, I've never actually had to buy a stock, but you do have that obligation, right? So let's say I sell that 135 put. Now I have a possible obligation to buy the stock at 135. When is that obligation going to happen? If the stock goes way below 135 and it's close to expiration. But if the stock drops down for some reason to like $100 a share instantly, you might be forced to buy that $100 stock for 135 bucks. So what we do is we go down a little bit in price to, let's say, 130, and we buy a put. Now that put that you bought gives you the right to sell the stock. So the way it works is, worst case scenario, if you were forced to buy the stock at 135, you can now turn around and sell it to somebody else for 130. You have reduced your risk to $5. And because the option that you sold was more expensive than the option that you bought, you're doing this as a credit. You're actually getting paid to place the trade. If you do this on 10 contracts, your possible maximum profit here would be about $1,000. Okay. Now, again, in 15 years of option selling using the options paycheck system, what I just told you about, well, now you have the right to buy the stock, but you may be forced to sell the stock or buy the stock. That's never actually happened to me. I'm just kind of explaining to you what could happen in the worst case scenario. That's never happened to me in doing this, right? Now, this trade, what it does, right? If the stock were to go up, you're going to make money. You're going to make money because of that decay. Every day that you have this position, it's going to decay in price. If the stock goes up, that decay happens faster and faster. We get into the trade by getting $1,000. We can exit the trade later on for maybe $500. We keep $500. That same thing happens if the stock goes sideways. As long as the stock stays above 135, we still have a chance to win. And if we're wrong, we will exit the trade way before it expires and take a small proportional loss. Okay? Now, let's do some real life examples here. I want to show you some trades I did with my clients in my coaching to kind of give you a better understanding of how to set them up. All right? So I'm going to show you some numbers, so pay attention to this. Now, first off, we trade in accordance with market direction. So when the market is bullish like it is now, we place bullish trades. Now, I'm going to give you a tip. We're going to sell options that give me at least a 60% chance of winning. Keep that in mind. We're selling options 21 to 45 days away that give me at least a 60% chance of winning. So here's DRI. DRI is in a nice uptrend, right? So let's zoom in closer. Stock's trading at about $203.85. So what I do now, I like the stock. I think it's going to go up. I'm going to go to my option broker or Options Pro, for our software from VectorVest. Brokers have this information. Our software has this information. Remember what I said you're going to do if you think a stock is going to go up. You're going to go underneath the stock and you're going to look at the options, put specifically. So right now, the stock's trading at $204 a share. It's $203.85. I'm rounding up. If I were to go out there and sell a put at $200, that gives me a 55% chance of winning. Why? Because there's a 55% chance that the stock's going to stay above $200 as we get to expiration. Remember, the stock's at 204. That's going to give me about a $4 cushion to be wrong. It can go up, it can go sideways, it can go down, right? If I go a little bit lower and I sell a 195 put, that gives me a 64% chance of being right. Why? Because based on the historic movement of the stock, it has a 64% chance of staying above 195 to expiration. If I go all the way down here to C, which is at 185, it would give me an 80% chance of being right. Why? Because based on the historical movement of the stock, it has an 80% chance of staying above 185 till you get to expiration. Like I said, these aren't some kind of proprietary numbers. Pretty much every broker out there has probabilities based on option strikes. Okay? Now let me ask you a question. And I want you to type this in the chat. Not knowing anything else about options trading, not knowing anything else. If you were to look at this and say, hey, 55%, 64, 80%, which one would you pick? Which option would you pick, not knowing anything else about being an option seller, anything? Which one would you pick here? And then, Susan, you were first, 80%. I would hope, not knowing anything else about this, that you would have said 80%, right? Now, 80% right is good. A couple of you guys said some other things, but 80% is, if I'm just telling you want to be 80% right in a trade, that's a good number, right? But what if that 80% trade for every winning trade paid you $1,000? But then when you lost, let's say $8,000. 8 winning trades, you're going to make 8 grand. But on those 2 losers, you're going to lose 16 grand. One bad trade killed all of your winners. Simple as that. Because, like everything in life, too much of something generally isn't good, right? Like, I always use the example of, having a glass of wine every night is supposed to be good for you, right? Well, having 3 bottles of wine is going to probably make your liver not very happy. Drinking 8 glasses of water a day is pretty healthy, but not if those 8 glasses are 64 ounces apiece. You're probably going to get really, really sick by drinking too much water. So again, probability is something that we want to use, but we want to use it in moderation. Too much probability causes big time losing trades. We want our probability to be just right, like the Goldilocks thing, right? So some of you said 64%, and that's pretty much where we want to be, in that 64% range. In the 60% range is key. So this trade, kind of like I showed you earlier, this is an example of what's called a bull put spread. Bullish, because you should do this when you're bullish on something. Puts, because we're using puts, we're going underneath the price of the stock, and we're doing puts. I'm going to sell a 195 put that has a 64% chance of making money. Then I'm going to go down further, and I'm going to buy that protection at 190. I don't care what the percentage of that is. This is the only percentage I care about. I have a 64% chance of being right. I have a 36% chance of being wrong. Okay? And all the stock has to do is stay above 195 and I win. Now, in this particular example, the risk on the trade was only about $98. They have built-in protection plans. Okay? In this particular trade, here's what I generally like to do. When I enter these trades, I set up a trade where I get paid approximately $1,500. That's what I want to do. Okay? And my goal is to stay in that trade to where I can keep 50%. So what does that mean? As the market goes up, my trade that I sold for $1,500, the value of that's going to drop. Maybe 1,000, maybe 800. When it gets to about 750, about half of my order, I'm going to exit. And that's what I did here. So take a look. The stock goes up. The stock actually came back down some. Then it went back up. It didn't matter because we stayed above this guy right here. And I was able to capture $712 in profits. Now, if you're going to say, Ron, I thought you said 750. Well, that 712 is after commission. So I had to pay commission on the trade too. And that commission in this case was like, $38. But 2 weeks, I was able to get out of that trade. Now, we also do it when the market's bearish. The only difference is we place a bearish trade. So here's Target, right? Target's in a nice downtrend. So the whole market was down at this point. Target was in a downtrend. We're going to look to place an income trade now on Target. We go out 21 to 45 days. Now, the only difference here is this. Since we think that the stock is going to go down, we have to choose a strike price above the stock. Above the stock. So same thing. I go to my option broker, and here's what I see. On this stock that's trading, and again, I'm just going to round the number to 131. If I sell a 135 option, it gives me a $4 cushion to be wrong. I could be 64% probable. If I go up to B at 140, I can be 76% right. If I go up to 145 and sell a 145 option, I could be 85% right. Now, I'm going to help you. We already pretty much know that these big numbers aren't going to work. I wish there was a way I could sell an 85% option and make consistent money. They're just very hard to do. Okay? It's very hard to do. It's got to be very accurate. And you got to take a lot of risk on. So let me ask you guys a question. Out of B and C, which one do you guys think it's B? Which one do you think it's C? Which one do you think it's anything? In the chat, type. All right. I see some B's in there. I see some C's. Susan, Tim, Terry. Safayette, Richard. All right, here's the cool thing. You're all right. B or C is correct. You could do either one of these, honestly. It doesn't make a difference. Do B, do C, it makes no difference. Because here's the thing. This one, statistically, as you know, is the one that you would want to focus on, right? You want to be in that 60% range. But here is where that little volatility thing comes into play. Remember earlier I told you about volatility? And when volatility gets really, really high, you can add even more probability. In some cases, like Target, we were actually able to go out to as high as 76% because the options were extremely expensive. So whether you said B or C, you would have been right on either one of them. But because the volatility was so high, I was able to choose 76% in this one. So here's the trade. Now, trade's a little bit different. This is called a bear call spread. All right. Bearish because you do it when the stocks are bearish. Calls because now we're not using puts. We're going above the current price of the stock and we are doing calls. I'm selling a 140 call, which gave me like a 74%, if I remember correctly, chance of being right. And I'm buying a 145 call as my insurance to protect me. Again, I don't care what the probability on that one is. All it's got to do now is stay below 140 for me to make money. And that's exactly what it did. We stayed under 140, and it only took 7 trading days for that option to drop from around $1,500 in value down to a point where I could exit the trade and make 50%. And if you would have sold the 135, by the way, you still would have made money. Like I said, either of those trades work just fine. Okay? Now remember, you don't have to understand all the mechanics right now. That's the key. But this is how we go about our business. Okay? You're creating a future where you're trading these options. You're going to income grow. You're not going to spend hours of your day doing this. Now, another client I worked with is Jim. He said prior to working with me, he said his results were inconsistent and he felt very unsatisfied. He kept thinking there had to be something else out there that was better. Have you ever felt that way too? There's something more out there. Jim said he wanted a way to supplement what he was doing that would provide more of a regular income with a higher probability of success. He said he learned the system of being an option seller. He had 21 winners in a row and returned 76% in about 8 months. And his average trade lasted only 8 days. Can you imagine how that must feel from going to be inconsistent where all your trades are generating income? Now, that was Jim. I want you to think about yourself. What would you be able to do if you were able to implement this in your own portfolio? What would it allow you to do? Hey, retire earlier if you're still working, go on more vacations, play more golf, whatever it is you like to do more of it. Buy a nicer car, whatever. I don't care. What would adding 3% a month to your income system allow you to do? You don't have to share it with me, but just think about what it is. And it all comes back to being the casino. When you're an options seller, you're controlling risk and putting the odds of success in your favor. The options paycheck system is going to make sure you have that guaranteed maximum risk. And it all goes back to whether you want to be the gambler or the casino. Because remember, keep in mind, the house always wins in the end. Now, I want to put this together. I want to show you how you can have a bulletproof system that you can do in as little as 15 minutes a day. And a lot of my students who've done this have told me this is like the most important thing they learned. Well, why? One of the biggest things people ask me is how much time is it going to take me? And that's a great question. Here's the challenge. There's thousands of stocks out there, and you got to find a way to pick the right stock with the right strategy. When do you get in? What expiration? What price? What if it goes against you? When do you get out? All that stuff. And when you start thinking about that and it rattles off, it's like, oh my gosh, this is like finding a needle in a haystack. There's so much information I got to look through. I don't know where to look. I don't know what to use. You spend hours putting your trades together, going from guru to guru looking for advice. You're trading blindly. You're like a mouse running through the maze, bumping into wall after wall. You don't know where to go. It's stressful. It's disheartening. With the right system, though, you can identify good trades, get reliable income as little as 15 minutes a day. And if you think you're too busy, remember, time's your most valuable resource. This is just 15 minutes a day. It's designed to give you back control of your time and money. Because what could you do with that freedom? Now, to get that, you need a system, though. And not just any system, a straight line system, a simple way to know when do you place your trades, what type of trades to place, how do you find them, how do you set them up, how do you manage them. So I'm going to walk you through the 6 steps of the options paycheck system. Now, step number 1 is market direction. A lot of traders just ignore this and they go out and start placing trades, right? But we're going to be placing trades that are either bullish or bearish. You have to know the direction of the market to know which direction to trade. Okay? We're going to narrow our focus to these two scenarios, only one at a time. Our paycheck system has a timing signal built in that tells us the market direction. Right now it's bullish, for instance. We're only doing bullish trades. Once you know the market direction, we're going to look for stocks that are likely to move in that same direction. So don't just trade stocks you know or what you read in IBD or whatever. Find stocks that are likely to move in the same direction. We have two ways of doing this. We look at fundamentals and we also look at the graph itself, the price trends. Okay? We look for good stocks that are rising when the market's rising, bad stocks that are falling when the market's falling. Okay? We have a bunch of pre-built scenarios and setups that we use in our VectorVest platform that can find you these things pretty quick. Then we come down to the options. You've got your market direction, you know what stocks you want to trade. Now it's time to see if the options are working. Remember earlier we talked about volatility. We're going to focus on options that have a higher end of volatility, right? We want those overpriced, expensive options. And to take out some of the volatility, the movement of the stock, we don't trade around earnings. So we're going to make sure earnings aren't upcoming. We're going to make sure that the expiration is in that sweet spot so we can make money even if we're wrong. Okay? Now, you can use searches from brokers. Some of them are better than others. We happen to have a search for this in our Options Pro. I find these in a couple of seconds. Now you're going to set up the trade. How are you going to set it up? You're going to look at the probabilities, right? You are going to sell the most probability that you can get based on the strike price, just like we did for target and like we did for DRI, while managing the risk and the reward. Okay? We're going to make sure we have the best risk reward ratio that works with the probability. Now that you've got your trade picked out, you got everything managed, you're good to go. Now we got to figure out what to do with it. I don't want you feeling frozen like a deer in the headlights because once you put a trade on, you don't know what to do. Before we place the trade, you have to have a plan. We tell you where to take profits, where you can repair or adjust the trade to reduce your losses if it's going against you, and most importantly, when to exit with that proportional loss if you're wrong. Okay? Now, lastly, we want a tool for speed and efficiency. Something that you're liking using, right? Now, again, some brokers have great tools. IB has good tools. Thinkorswim has great tools. E-Trade has great tools. Fidelity has good tools. Most of the brokers have decent tools for this. We have a tool called Options Pro from VectorVest, and that saves me a lot of time by setting these things up. Now, another one of our clients, Hugh, actually said that was his most important thing. He wanted a system that not only worked, but was more efficient. He wanted to balance his trading and his free time. He was retired. He said at the point when he talked to me, he didn't have that balance of free time and trading. Are you like that, where you're spending too much time doing things you don't want to do and not enough time doing the things you want to? Now that Hugh learned the options paycheck system, he said he has more confidence, more free time. He's able to have more fun. He said in his first 43 trades, he had 38 winners with 26,000 in profits, all from the system. Now, here's what I want you to do. I want you to take your pen. I want you to put a little star next to the part of your system where you're really good. So, for example, if you have a quick way to find a list of stocks likely to go in the direction of the market, put a little star there. If there's an area where something isn't working or you need a little work, put a little frowny face there. So, for example, if you don't know how to manage, repair, trade, put a frown there. Don't overthink it. Take about 10 seconds, and I want you to give yourself a star or a frown. Now, I'm willing to bet maybe 1 in 100 investors will ever know this. Share with me in the chat, what areas do you personally need to work on of those 6? What do you need to work on? I'm kind of curious to see where we're at. All right. Oops, I accidentally screwed up my chat there. I see all of them. Trade management, Bill says. Okay. Terry, there should be a square for execution, pulling the trigger. I like that. So I see trade management. I say option selection. Never traded options before. Trade management. See, trade management's a big one. And that is big. If you've tried selling options before and trade management is not in your skill set, then yeah, it could definitely be a problem. When to exit. That's kind of a trade management thing as well. So trade management, setup, Rich, Susan, Art, calculating probability, trade management. Listen, I don't know the exact reason you came to today's webinar, but I'm going to make some guesses here. And the thing is, you got to make sure you have check marks all the way down that list to do this successfully. Maybe, you came to the seminar because you haven't really known what to do. You feel like you're trading blindly. You're bumping into one wall into the next. It's left you with inconsistent results. You make a little bit of money, but you then give it all back on your next trade. Kind of like what Jim said before he learned the options paycheck system. Maybe you've just had loss after loss, and those small losses are just killing your portfolio. The money coming in, it's not exceeding the money going out. Maybe you're just not where you want to be. Now, today I showed you the secrets to fixing that. And again, it's a secret I bet only 1 in 100 investors will ever know, and now you're one of them. You saw by being an option seller, we can win even if we're wrong. How you can do it with very little risk. And again, it's even less risk than buying and selling stocks. How you can get that system, that bulletproof income system, in less than 15 minutes a day. And I showed you just a few of the many people who use the system so they never have to worry about their retirement again. You saw over and over that the secret to generating consistent income is that shift from being the gambler to being the casino. You're going to be that one investor out of 100 who knows that. That means there's 99 other investors out there who will continue to do things wrong. They'll be buying options, making all the mistakes we talked about. We can't stop them from doing it. There's always going to be those investors out there who will buy options incorrectly. Let them be the gamblers. As long as the gamblers are there, they need the casino. Because remember the old saying, the house always wins in the end. Our options paycheck system teaches you how to stack the probability of success and control risk in your favor, just like it taught Brian and Bruce and Bob and Jim and Hugh and John. Now, you've seen how the system works. You've heard how others are achieving that financial freedom. So the question is no longer can it work? It's are you ready to make it work for you? So let me walk you through how to get started today. If you're like most people, you're wondering, well, how do I implement this system in my portfolio now? Well, it comes down to a choice. Option number one is you can choose to do nothing. Stay where you are. If you already have enough money to retire, maybe you don't need an extra income, then you don't need to worry about the paycheck system. But if you do want to make some extra income every month, that leaves you with two other options. Option two is you can do it alone. Try to learn how the option trades work, try to figure out the direction of the market, learn how to analyze the thousands of stocks, find the best ones to trade, hope you pick the right one, you manage it right. If you're willing to work hard, spend hours in front of your computer, and you're willing to learn by trial and error, then you might be able to pull it off. But option three is the simple one. Let me guide you through it. I'll walk you through each piece of the options paycheck system in just a few weeks' time. You're going to have a simple system to follow that doesn't take a lot of time. So, of those three options, which is going to be easier for you? You know, there's two types of people. Person number one is someone who dreams about their financial goals, but they never take action or do anything to make it happen. Person number two is someone who's serious about their financial future. You're ready to take action when you see an opportunity in front of you. And that makes you the perfect candidate to get started on your first options paycheck. So let me tell you what we put together for you. The options paycheck experience is the most comprehensive program for generating consistent income using options, even if you've never done this before. It's the only implementation program of its kind that teaches you the secrets to generating consistent income because we show you exactly how to find the trades, set them up, and manage them to generate income. That how to do it safer and consistent in any type of market condition. Now, after going through the experience, you're going to know exactly how calls and puts work, along with all the fancy terms. That way you never have that fear of options. You're going to get clear signals telling you when to trade or not to trade, bullish or bearish. You're going to be able to quickly identify the stocks that are the best candidates using a rules-based approach. That's going to free up a lot of time. You're going to be able to set up income trades that give you a 60+% success rate. You're going to have a trade management game plan in place prior to placing the trade. That way you can handle any situation the market throws at you. You're not going to enter a trade where one bad trade will wipe out a bunch of winners. This is all known before you place the trades. You're going to be able to enter and exit trades with your broker confidently, like it's your first, whether it's your first trade or your 500th trade. You're going to implement a system to safely and consistently generate income. Now, the course is 8 modules, and we made them so each module builds on the one prior. So as you go through the modules, you're getting closer and closer to the end goal, which is that system for consistent income. Now, we start in the beginning. The first 2 modules are what we call the option income foundation. A lot of people try to build that successful income portfolio, but they base the portfolio on a weak foundation of knowledge. We understand what it's like to learn options. We've been there. That's why it pays to learn from a team who's gone through this before. The outcome you're going to get from Module 1 is you're going to know exactly how calls and puts work. That way you can use them in your trades confidently. You're also going to know which option terms that you need to pay attention to, option terms that you can ignore. That way you're not wasting time or getting frustrated with all this knowledge you don't need. In Module 2, we're going to teach you the spreads, the bull put and the bear call. You're going to know how to work them. You're going to know how they work. You're going to have all the confidence that you need to start building your income system around these new trades. Now, once you have that foundation of an option knowledge, then we're going to kind of transition. We're going to start laying out the step-by-step system to placing these trades that generate the paychecks. So each step along the way, we're going to continue to stack probability and reduce risk. And it all starts with knowing when to trade in Module 3. Here, you're going to get complete clarity on market trends. So instead of looking at everything, you're going to narrow your focus. You're going to know whether to place a bullish trade, a bearish trade, or when not to trade. Now that you know the direction of the market, Module 4 is going to teach you how to find the best stocks that are highly likely to move in the same direction of the market. It's going to stack probability even more. So the outcome here is you're going to know how to quickly find the best stocks and indexes to trade that are going to give you the highest probabilities. Now that you got your list of stocks, we're going to narrow it down to the best option candidates that give you the highest probability. By using the rules in this module, you're going to make sure you're getting paid top dollar, talking about high volatility, and make sure that you make money even if the stock goes nowhere. Module 6, we're going to continue to stack probability and reduce risk by the way you set your trades up. You're going to make sure the trade has that perfect combination of risk and reward. I know a lot of you asked, Ron, how do you know to choose this one or that one? I gave you a little bit of that tonight with the probability settings, right? How do you know where to choose the insurance? That's what Module 6 is one of the things we talk about. Great trades don't happen by accident. They happen because you strategically set them up correctly right from the start. Now that you've got your trade picked out, you ready? Module 7, we're going to make sure that you've got your game plan in place so you know when to exit the trade to take profits, how to minimize losses. You're never going to be frozen like a deer in the headlights again. No matter what the market throws at you, you're going to know how to react, and that's going to allow you to trade stress-free. And then now that you got everything done, you've got your trade picked out, the management plan mapped out, now we got to place the trade. Module 8, we're going to break down the trade execution phase into simple steps that you're going to be able to commit to muscle memory in no time. Now, if you're new, we're also going to give you our spreadsheet/checklist. Now, what this spreadsheet checklist is going to do, it's going to do a lot of things. Number one, it's going to lay out the steps that you need to be following to each trade. The other cool thing that it's going to do is it's a spreadsheet. So it's going to do all the math for you. You'll put in your account size. You'll put in, it'll tell you how many contracts to risk. It'll tell you where to place your stops, where to place your profit. It's going to tell you all the key numbers of the trade. It's a really cool thing that we've added to the paycheck course in the last year. Also, if you're new to brokers, we have quite a few walkthrough videos. I happen to use Thinkorswim, so if you use Thinkorswim, you're in luck. You'll see me use Thinkorswim. You'll see me show you how to put trades together, put all the orders in. You'll also see some walk-by or step-by-step walkthroughs of Thinkorswim. But I also got some videos out there for Fidelity and IB and E-Trade and things like that. Now, before I bring up the price of the course, I want to make this even more low risk. This course offers a 100% money back guarantee. We want you to go through the entire course. If you're not satisfied we taught you how to profit using options, let us know within a week of finishing the course, you get your money back. It's no risk. All we ask is you actually do the course. Watch the recordings. Come to the live events or watch the recordings of the live events. Do the assignments. We know if you put the work in, you're going to see the results. If you don't do the work, you won't be eligible for a refund. Now, the reason why I have such a refund policy like this is because I only want to get with people who are ready to jump in and actually do the work with me. Okay? And again, you're learning a system that over the last 8 years has averaged that 3% per month, 36% per year. And it doesn't take a lot of time to do it every week. Another client that I worked with is Joe. He said, Ron, I'm writing to thank you for teaching the options paycheck course. I took your class last fall and wanted you to know my results for the past 10 months. I keep a journal to document every trade, and so far I've profited on 239 trades of the 350 I've taken, a 68% win rate. I've profited over 100,000 in this time. What's more exciting is that since my knowledge and experience have grown in regards to taking really good risk-reward trades, I've profited over 50,000 in the last 6 weeks. My success rate has been 78% over my last 100 trades, and I only take trades with a 2-to-1 or better risk-reward. Thank you again for teaching this simple but very effective system. Now, I'll tell you some things about Joe. Joe trades a lot. 10 months, 350 trades. He trades more than I do. I trade like 150 to 160 trades a year. So I'm averaging like 10 to 15 trades a month. Joe was trading a lot more than that, and there's nothing wrong with that. If you want to do this more full-time than 15 minutes a day, by all means, do it. Spend a half hour, spend an hour, spend all day. It's up to you. What you put into it, what you get out of it. Okay? Now, before I talk more about it, I want to point something out. This is not a get-rich-quick scheme. Don't expect to become a millionaire in the next 24 hours. It's serious, requires some effort. So if you can't commit to it, then don't do it. It's not for you. It's for people who take their investing seriously and who are willing to put in the time to learn the system. So if you're serious about it, ready to do the work and get the results, then the Options Paycheck course is perfect for you. Step-by-step training to go from option basics to the full, complete income generating system. Just these modules alone are worth the price of the course, but we also put together some great bonuses for you as well. The first bonus is what we call the Mastery Package. Now, starting this week, you are going to learn 2 modules a week for the next 4 weeks. What the Mastery Package does, you're going to watch the modules on your own time. Then we're going to get together 2 times. It actually starts this week. I'll give you a calendar here shortly. We're going to get together twice this week, and we're going to discuss the modules, right? So module 1 and 2 this week. We're going to get together and discuss module 1 and 2 this week. All right? We'll do the questions with you, the quizzes. We'll go through the assignment walkthrough. I'll hit the key principles. And then on Friday, we do another live Q&A. You're going to get 3 live sessions a week, giving you plenty of opportunities to ask questions and get help. You're also going to get access to our private dedicated Options Paycheck email. It goes right to me and my colleagues. We answer your questions relatively quickly. Once the class starts, I kind of have a 24-hour rule for myself to get back to you. You're also, if you don't have access to VectorVest and Options Pro, we're going to give you VectorVest and Options Pro for the duration of the live curriculum. So basically November and most of December. So that's how you're going to learn the system. You don't need Options Pro specifically, but we're going to give you kind of access to our tools to see how they work. You're also going to get an implementation month. So essentially, for the next 4 weeks, we are going to get together and we are going to teach you the 8 modules. After the 8 modules are over in 4 weeks, we're going to start implementing. You're going to be invited to my live trading sessions where you're going to see me put these trades on. You're going to see how I do the trades, how I manage the trades, how I look for the trades, how I put the orders in, everything that you need. We also have office hour sessions. We do those twice a week. Those are just more sessions where we can get together and we can go through the process. A lot of my students have told me this is the best part because they saw how I implemented this over and over again. It really helped them clear up any issues they had. And then if you're like a lot of my clients, a lot of folks start with the SPX paycheck system. 1 trade a week takes 15 minutes. It's got 1 symbol. You don't have to be a chart master. You don't have to worry about other things. It's something that you can do very quickly. My teammate Brian taught this to his 14-year-old daughter and she could do the trades. And for a lot of my students, this is how they trade. It's how they get started or how they trade all the way through. So again, with a recap, you're going to get the complete options training program, 8 training modules, the videos, the cheat sheets, the checklists, the quizzes, the slides, everything. The Mastery Package, the Implementation Month, and the SPX Paycheck System. All wrapped up, $5,475 value. But here's what I'm going to do. I'm going to roll up my sleeves, work with a couple hundred people who are serious about generating income. So if you want to be one of them, we're going to work together over the next 8 weeks to create an income system in your portfolio. Even if you've never had success with options before, you and I are going to do this. And I say you and I because I'm the presenter. I'm the one that's going to do this with you, along with my colleagues. But you're going to hear my voice more often. Okay? So instead of that $5,200, we have an early bird price of $1,295. Okay? Now, I always like to throw an extra bone to people because you've been with me for an hour. If you order before the end of the webinar, $995. That's the cheapest price you can order the course for if you've never taken it before. Okay? They get the full course. You get a year access to the hard materials of the course. You're going to get 8 weeks access to Options Pro and VectorVest for $995. Once we finish, it goes back to $1,295. So get out there, go to optionspaycheck.com, get yourself registered. And listen, I know $995, that is such a value proposition, right? How much are you going to learn by trying to do this by trial and error? How much are you going to lose by trying to do that? How much profit are you going to miss out? How much time and energy are you going to spend trying to do it on your own? And then ask yourself, hey, if I did this and I can actually do that 3%, how would that affect your life? And think of the return. There's a 100% money back guarantee if it doesn't work. The risk is all on me. There's an old saying that the best time to plant an oak tree is 20 years ago. Plant it today. It's not too late to plant it today, right? Yes, if you planted it 20 years ago, you could be sitting under it now enjoying the shade. Plant it today. Learn to create income. It's not too late to begin to prepare the retirement and to generate income. This is going to be one of those deciding days. It's going to be the day you decide to take action, set you up for retirement, or are you going to look back where you squandered the great opportunity to start this? I look forward to working with all of you in class. Don't miss this opportunity. Again, go to optionspaycheck.com. It's $9.95. Get yourself signed up. You will not find a lower price for a first-time course subscriber. Now, before we break into the Q&A, a couple more things I want to talk about. I did say it's a live course. Let me explain how this works. I mentioned it starts this week. It actually starts tomorrow. Tomorrow at 4:30, we're going to have a live welcome session. That live welcome session is really just to kind of get you acclimated to our university site, to know where all the resources are, how to get a hold of us, expectations. And then Wednesday, we're going to do Module 1. When I say we're going to do Module 1, what does that mean? Between right now, let's say you sign up for the course right now, you're going to get access to all the course materials, except for Options Pro and VectorVest. That comes in a couple days. You're going to get access to all the hard materials. Before Wednesday, I want you to watch Module 1. Then we're going to get together Wednesday at 4:30, and we're going to do the mastery session. We're going to review the key principles. I'll walk you through the quizzes. We'll do the assignment together. It's just one way that, we're going to repeat the process to you. You're going to watch the modules on your own. Then by Thursday, watch Module 2. Then we'll do the mastery Thursday night. Friday, we'll do the Q&A, noon to 1 o'clock Eastern Time. Then as you can see, through the next 4 weeks, we're going to do the mastery sessions every week and the Q&A. These are all recorded. So if you can't make the live curriculum, it's okay. We record everything. It's posted on our university site within 24 hours. Now you can see the last week of November, we're done with the 8 modules. Now we shift into implementation. You're going to be invited to my 11 a.m. SPX trade and my 2 p.m. stock selection trades. Again, all recorded for you if you can't view the live ones. Office hours at 4:30 on Tuesday. Again, we're going to go through the process to find trades. If you're the kind of person that has to trade in the nighttime hours to find trades for the next day, you'll really love that one. And then Fridays, we do office hours at noon. Again, all of these are recorded. It goes through the 3rd week of December. Okay? Remember, these are all recorded if you can't view the live sessions. Another one of our clients, Greg, he said, prior to the course, I struggled with knowing when to protect myself when the market was moving away from me, and I feared if I didn't fix it, I'd lose more of my portfolio than I could afford to lose. After taking the options paycheck, I feel better prepared to trade, much more confident. I made a net of $10,200 from my options income trading in the first month with 9 winners and 1 loser. I would absolutely recommend the course. It was well done, very educational and informative. It's an excellent educational opportunity. I'm thankful I took advantage of. Don't let fear hold you back. You'll make more in the first month than you paid to take the course. I was one of those fencers who didn't take the course for a long time when I saw it offered. I lost a lot by not taking the program sooner. I'm very grateful and appreciate the work that was put into making this training program available. A lot of people ask, how much options experience do I need? We've polled all of our prior attendees, and 85% of them said that you can be successful with little to no prior options experience. My advice is this. If you know what a call is and you know what a put is, you're probably golden. Even if you've never traded them before, if you know what a call is and you know what a put is, we can work with that. These are just a few more of our attendees. Cheryl said, I've surpassed my expectation. I don't need the money back guarantee. I tripled my investment. Frank, after taking the course, I have a profit of $7,300. Before the course, it was a crapshoot. Now I believe in the options trades I'm doing. Cam said, I've made back the initial investment so many times over. Even though it's a small part of my portfolio, it's probably the most profitable. Jake says he finally found a method of making consistent winning trades with a high probability of success. So again, get out there, get signed up for it. The live curriculum starts tomorrow. It's not too late. This is your last chance to sign up for $9.95. Go out to optionspaycheck.com. Get yourself registered. Take advantage of the course. Set yourself up to learn how to create income in the last stages here of 2025. That way you're ready to go in 2026. All right. With that, I will bring on my colleague Steve, and we will do any remaining Q&A for you.
All right. Hey, Ron, nice job.
Thank you.
You need some oxygen?
Yeah, that last part I try to rush through fast because I want to get to the Q&A because I try my best.
No, it's all good, man. Nice job for a Monday, especially down here, man. It's raining outside. I could use all that energy. It was great. So anyway, not that many questions, honestly. I think we've tidied all those up in the chat already. So I'll just hit some of the highlights for questions that we typically get. Maybe some folks just, haven't maybe they're a little shy, something like that. So All right, look, if you have attended the options paycheck before and you're somebody that would like to attend it again, maybe life got in the way, something crazy like that may have happened to you, you can't, there's a refresher rate. So assuming it's been more than a year, otherwise you still have access to the material. Assuming it's been more than a year, you wanted to take it again, it's $4.95. Anybody that's elite gets the $9.95 price at any time, but do not delay because, as Ron's already mentioned, we start tomorrow. So the earlier you guys get these things done, the better. I want to create a little bit of urgency there. Time is of the essence right now. This next class, listen, this class can change your life. If you're somebody who wants to learn how to sell options, to generate income, to make more than enough to retire comfortably, this is the course to get that done. Ron is the best. I've been around a lot of great instructors. I've met a lot of people who know an awful lot about options, and Ron is right. He's very gifted, but he was also taught by some of the very best that I've ever known. And now Ron is one of those people as well. The other thing I would say, this course is broken up into small chunks, little bite-sized pieces, if you will. You saw that there's a lot of mastery sessions. There's a lot of modules. It's because we're taking it piece by piece, starting out with the core building blocks, working our way all the way up into the trades. It's very, very well done. Very, very well laid out. It's probably the best course we have here at VectorVest. I fully believe that in terms of how well thought out and how well laid out the course is. Holiday is coming around the corner. Some of you might have concerns about that. Look, everything's recorded, and all these mastery sessions, even the lives, everything that we do essentially is recorded. So don't worry about, if I might miss this 1 or 2 sessions or whatever. It's not going to be a problem. It really won't. And aside from that, I really don't have much else. The timing of the webinars, if you want to comment on that really quick, Ron.
Yeah, so kind of the webinars are the mastery sessions are at 4:30. The Q&As are at about noon. They're all about an hour long. That's all Eastern time, by the way. And kind of
Yep.
getting into that, set yourself aside probably 3 to 5 hours a week to go through the curriculum, watch the videos. And again, you don't have to watch the videos live. You can just watch the recordings. We have, historically about 50% of our students, and actually might even be more, that take that do the options paycheck. They just watch the recordings. So,
Yep.
like I said, 3 to 5 hours a week, you'll be good.
Yeah, I think that answers that next question there too. The modules, in totality for like the complete module 1, aside from the breakdown, they're probably about 45 minutes to an hour in length, wouldn't you say?
Roughly, yeah.
Yeah, plus the masteries and everything to make sure we coach you through it. Yeah, that's all I got. I don't know if you want to show them anything extra.
Yeah, one thing I will say, by the way, you guys actually get a little special perk here, because I did a special video for YouTube. You actually, if you go to the options paycheck, well, let me go to options paycheck. Uh,
I had to use Chrome earlier.
I just have to take out the HTTPS part.
Yeah. There you go.
There you go. Oh, okay, maybe not. Well, anyway, the thing I was telling you about is we actually have the special price till tomorrow. Normally we cut it off right when the live webinar ends, but you actually can sign up for it till tomorrow and get that special $9.95 price, because I did a special YouTube presentation. We left that open. But yeah, you're, like I said, spend the rest of the year this year, get yourself signed up for this. Let's work together over the next 8 weeks. Let's get you a good income system for 2026. And one thing I wanted to show you guys really quick here before I go, I just want to show you, one of the greatest things about this is you are going to get access to our spreadsheet. And our spreadsheet really is going to track all of your trades. And the cool thing about it is this spreadsheet, I know it might look complicated to you right off the bat. Like, this is tracking all of the trades I've done this year. Along the top gives you every rule that you need to follow. If you scroll over, it's going to make sure you're using the right expiration, the right open interest. It's going to make sure your earnings dates are good. It's going to do the math for you to tell you, okay, you should trade 14 contracts, 14, 19. This is the risk reward. This is the true risk. It's going to lay out whether it's okay to trade. It's going to lay out your potential profit, your potential loss. This thing is just awesome. You can see all my trades are obviously okay to trade. And just to give you guys a little bit of more up-to-date returns. So I'm pretty much right where I would normally want to be. I'm 67 wins, 45 losses, so basically right at 60%. But I also want to point out my average wins about 739 this year. Remember, I try to make about 750. And look at my average loss. It's lower than my average gain at 60% success. That's what I shoot for. Now, I'm up around 16.5% on the stock trades this year. On my SPX trades, a little bit lower. I've got 23 wins, 20. Right now, I'm up around, I only dedicate 50,000 to this. I'm up around 15% on my SPX trades. Okay. If I was matching it at 100 and 100, it'd make more sense. But I'm up around 15% on my SPX trades. 15%, 16%, 31% total for the year. And I still have November and December to get up to that 36% level. So again, that's one of the cool things you get. You'll be able to track your trades, see what everything is, let the spreadsheet do its work. Okay, but get yourself signed up. The special price goes away tomorrow at registration. We close it at 10 a.m. So get yourself signed up. All right. All right. With that, I'll go ahead and I'll close the session for tonight. I hope to see all of you tomorrow at 4:30 for the live event, and I'll welcome you officially to the Options Paycheck Curriculum. So thanks again, everyone, and we will see you hopefully tomorrow. Take care, everyone.